Emeka Chukwumokedi and his colleagues for helping us organize these series and put things together. So thank you very much for this, and we're very excited about this collaboration. And we hope that as things move along, our members will benefit more from the collaboration. We're also grateful to the firm of McDermott, Will and Emery, who graciously took yesterday's sessions. Panelists for today, Damilola Salau and Babajimi Ayorinde, and also David Sinoturo. We're grateful to you for joining in today. We're grateful to the law firms of Olaniwo Ajayi LP, the New Practice TMP, and of course Alex for lending us their distinguished colleagues, panelists, partners to be part of today's session. So thank you very much. So distinguished colleagues, the first facilitator for today is Mr. Damilola Salau. Damilola Salau heads the Technology, Innovation and Fintech practice in Olaniwo Ajayi, where he plays a significant role in helping exciting new businesses to thrive. He has advised top market players in the sector on strategic investments and cutting-edge transactions in the Nigerian market, Africa, and beyond. He has advised a vast number of leading names in fintech and technology in Nigeria, on the African continent, and globally. He has an intrinsic understanding of various legal, regulatory, and business landscapes in the technology space, and advises on business establishment and market entry, regulatory compliance, corporate structure and investment, strategic partnerships, amongst others. Damilola is particularly familiar with International Finance Corporation, IFC, and other development finance institutions, DFI-led transactions, and have advised IFC and other DFIs on several projects and or transactions ranging from equity and debt financing to data protection. He also served as a volunteer for the World Bank on the publication of the Digital Business Indicators and World Development Report 2021. Specifically, he conducted a data regulation diagnostic on Nigeria, covering several topics such as e-commerce transactions, enablers for public interest and private interest data, safeguards for personal and non-personal data, cybersecurity and cybercrime, and cross-border data flows. Damilola has consistently been ranked as a leading lawyer in Chambers Global for fintech and Who's Who as leading fintech and technology practitioner, as well as his M&A work. It is my pleasure this afternoon to welcome Mr. Damilola Salau to introduce the topic for his session and also take us through the first session for today. Thank you very much. Dami, over to you.
Thank you very much, Tobina. Thank you very much for that. Good afternoon, everyone. It is a pleasure to be here. Thank you to all participants for joining us yesterday and for speaking with us again today. Today promises to be a very, very enriching and enlightening session. We have 3 sessions, as Tobina has mentioned. Myself, I'll be taking the first session, Babajimi of TMP will be taking the second session, and the last but not the least session will be facilitated by David Sinoturo of Alex. So without further ado, ladies and gentlemen, just to jump right in, as you know, just a quick overview from yesterday, we started with the international perspective to one aspect of fintech across the world, which is around cryptocurrency, observing the trends, dispute issues, and even understanding the products and the different types of cryptocurrency that existed. But over the next 2 days, we're going to be bringing it down home to us here in Nigeria and trying to help understand the landscape. And I'll be starting with describing the landscape of fintech in Nigeria, you know, as a subsector of the economy, and then how, you know, it can tie into our work as lawyers. And so that's general background. So we'll be going through, I'll be setting out the context, fintech generally in Nigeria. We'll be looking at different fintech segments, because when we say fintech means something very general, very broad. But there are sub-components of that. We'll be looking at the segments briefly. I will also be speaking a bit at the regulators that, you know, are part of the ecosystem those regulatory agencies that have within their purview one or several aspects, one or more aspects of fintech in Nigeria. Of course, there are some buzzwords we'll be using over the next 2 days that we think it will be helpful for people to understand a bit better. Of course, we'll spend some time talking about those, and then I'll try to go through some of the developmental areas of fintech. We'll look at how it's evolved over time, and then of course we will look at some of the areas that need some intervention. So by background, I know a lot of us have heard fintech used in conversations. We see it on social media, we see it in the airwaves, we see it in the news. What is fintech? What is fintech? Broadly speaking, it's just the use of technology to drive the delivery of financial services, to the users. It's using technology to make the delivery of financial services more efficient, make them more accessible, make them more available to those who are intended to use them. And fintech, can use, when we say technology, that technology can be hard technology, it can be soft technology, it can be from anything from software to infrastructure, to hard infrastructure, and we'll get into this in the next couple of days. So whether it's a payment you want to make, or a financial service you want to utilize, on an electronic channel or with a mobile device to, carrying out a transaction using a payment terminal or an ATM, or a transaction, using some form of physical infrastructure. All of that, comes under the wide umbrella of fintech. And obviously the third point that we have here says fintech describes the evolving intersection of financial services and technology. One of the things that we are seeing with technology these days is that technology continues to disrupt the way we live our lives. Whether it's how we transact business, to how we communicate with family and loved ones, to how we access medical services, technology continues to change the way life is lived. I'm sure if you asked anyone who was around 50, 60 years ago, maybe even 20 years ago, how a payment transaction could be effected, I'm sure no one will be able to describe quite easily, the way we effect payment transactions today. And that just shows how disruptive nature of technology. And no sector shows that more acutely than in the financial services space, because technology has literally changed every aspect of financial service. And we'll be looking at some of that over the next couple of days. But when you think about how all aspects of financial services, whether it's, we talked about lending, whether it's access to insurance services, it's money transfers and money transfers and payments, we see the footprint of technology in changing how it's been done over time. So let's talk about how fintech crept into our reality in Nigeria. How did it come into our consciousness? I remember when I was I think in early secondary school, to be able to make a payment or to withdraw cash from a savings account, one would have to go to the bank with a passbook, and you wait in line for a very long time for your turn to be able to, make a simple transaction of a deposit into your own account or a withdrawal from your account, or to make a payment to a third party. But I think in 1997 is where perhaps it may have started. In 1997 was when Value Card was set up. Value Card is what we now know today, as Unified Payments. And Value Card was set up in 1997 by a number of Nigerian banks at the time. And Value Card was the first domestic card scheme in Nigeria. And I remember very clearly that, with Value Card, you could load, I think the minimum deposit then at the time was 1,000 naira. With Value Card, the objective at that time was to be able to facilitate, payments without using cash, and that's where we think that's really when, the cycle really started. And then shortly after 1997, 2002, InterSwitch was set up. InterSwitch also, set up by Nigerian banks at the time, entered the scene and began to change the way financial transactions were consummated. Of course, eTransact launched later that year in 2003. eTransact is a very large, what we call a fintech today in Nigeria. In 2009, the CBN then released its own mobile payment service framework. And that is the framework that, that came out of, the payment system vision of 2020, and that is what led to what a lot of us used to talk about when we said the cashless economy, cashless transaction. That's what gave birth to the whole cashless economy and cashless transactions. In 2011, of course, the NIBS introduced instant payment. Now, previously, before instant payment, one would issue a transaction, one would issue a request, a transaction request, and it would have a couple of days before it is settled. It would have to go to clearing and all of that. But now, in 2011, when NIBS introduced instant payments, effectively, just as the name implies, the recipient will receive value almost instantly, and that was a game changer. That then meant that settlement could happen instantly in real time. There was no need to wait for verification, wait for clearance, wait for authorization, confirmation, authentication. All of that went out the window with instant payment. In 2012, of course, Paga was born, and Paga, very much like eTransact, just came and continued, changing the game until new entrants began to emerge. Of course, in 2016, some of the biggest names in payments today, in fintech today, launched their businesses. And I think perhaps one other defining event that happened was in 2021, where hitherto, of course, mobile telecom companies could not play in financial services space. But in 2021, the CBN, further to the payment service bank regime framework that was introduced by the CBN, mobile payment companies became eligible. Mobile telecom companies, became eligible and picked up licenses, and they've launched their businesses, they've received their licenses, and we're hearing the jingles already, and that could potentially be a game changer. And that, it just shows how, the cycle has continued to evolve over time, from one stage to the other, getting more efficient, opening up the field for more participants, bringing more value, providing more services to the consuming public, to you and I, providing us more options in how we can transact when it comes to financial services, how we can access financial services. And the objective here is just to create more access, to bring more people into the financial services space, because all of that has a ripple effect on the development of the economy. Because the more people that have access to financial services, the more economically empowered they will be. And the more economically empowered people are, the more, the better the society gets. Next slide. So why is fintech really important? Why do we talk about fintech? And why are we having these sessions? Why is it important to Nigeria? It's important to Nigeria because, as I mentioned already, because of the rate of financial exclusion. Because in Nigeria, poverty is so high and illiteracy is so high. One of the ways through which, as I said, economic empowerment can reach those in the hinterland, those who are underserved, is by leveraging efforts like fintech and areas like fintech, because they have the potential, because people must communicate, people must talk, and we have that substructure existing. Fintech is just effectively is just an effort to layer on top of that communication framework, access to financial services that will make life easier for a lot more people. And so fintech is one of the ways through which the CBN is the government agency that drives, the government's financial inclusion agenda by ensuring more people, with a view to ensuring more people are brought into, the net of those who are served by financial services. And so fintech is one of the ways through which the government is looking to reduce the financial exclusion rate and increase financial inclusion, and efforts like mobile money, payment service banks, which we'll hear a lot more about in the next few sessions. Those are some of the efforts through which financial inclusion concerns are being addressed. Of course, closely tied to illiteracy and poverty and financial inclusion is, of course, access to other financial services like insurance, for example. You know, the rate of Nigerian adults that have access to insurance services is an abysmal 1.9%, you know, compared to what the potential that exists, what the potential is that exists for insurance. If you think about the different use cases, for example, mobile insurance, for example, an insurance for, I mean, a lot of time when we talk about insurance, you know, we think insurance is for the rich, is a service for the rich or for big business, but no, insurance services can be accessed by the average Nigerian for small items. Insurance for a mobile phone, insurance for health insurance. Insurance can be at a micro scale, and technology can help unlock the potential there. Of course, if you look at the amount of money that was transferred electronically, you know, according to NABE in 2021, it's a staggering 221 million naira in just 1 year. That's a lot of money. And those transactions happened electronically. They happened on electronic channels. They happened either through mobile phones, mobile devices, or POS terminals, via USSD transfers, via the websites, you know, through different channels. And that's why it's important, because that's not it has formed an economy, a microeconomy in itself. And that's why fintech is so important in Nigeria. Of course, we know that Nigerian fintechs are doing excellently well today. In 2020, they raised close to $1 billion in funding to provide services that solve some of these points that we're talking about today. And that's why it's important. And that's why we're talking about fintech today. And so what are the sub-segments? So when you hear fintech, you know, there are many, I like to say fintech is a spectrum, you know, and on that spectrum are different, you know, across that spectrum are different subsectors and different segments, you know. So if a company that had an insurance service, or was using technology, you know, to solve insurance or make insurance more accessible, make it more efficient, make it more efficient, you know, because of an insurtech, that's a subset of fintech, because insurance is financial services and it's using technology to optimize those processes. Of course, we know about cryptocurrency. We hear about Bitcoin all the time. We hear about Ethereum all the time. That's cryptocurrency, you know, that's a subset of fintech, and how cryptocurrency has been used as a way of, you know, transferring value and as a means of payment in some instances. Of course, so I think my audio is, and so that has been, those are some of the use cases for cryptocurrency. It's better now. Okay, just moving on. Of course, other segments include enterprise infrastructure. You know, when we talk about tech companies that set up, provide back-end support to some of the institutions we see, and those institutions that provide the infrastructure that ensure that when I send money to you, you receive it. There's a whole back-end around that, you know, and that's the enterprise side of things. Of course, we know about the more commonplace financial services around savings, investment, and you know, crowdsourcing and crowdfunding. Then of course there's lending where is, you know, access to payday loans, you know, short-term loans, quick cash, you know, that's another subset of fintech. And of course, the deepest end in Nigeria today is around payments and mobile money. You know, together these form some of the deep segments of fintechs in Nigeria today. So when we say Nigeria has about 250 plus or minus fintechs in Nigeria, you know, they cut across these different segments, you know, and from here we can see that there's some, and this is according to E1, of course, we see that there are different, you know, some areas are a bit more saturated, a bit more concentrated, a bit more developed than others. Some areas have a lot more participants than others. Some are still coming up, some are still developing, some are still evolving, like insurance. But as I said, in payments, mobile money, we see a very huge 38% uptake there, whereas we have, you know, 33% 3% on the insurtech side. So these are some of the segments of fintech that we have that the fintech will sit across. Of course, this is not to say that you won't find some super techs. You'll find some super companies that have businesses across some of these lines. It's not unusual to find a business with, that is licensed to carry out, more than one of these sort of services, provide one of these services. It's not unusual. It's just about creating economies of scale, creating additional value, and increasing reach. Next slide, please. So just moving on from the different segments and talking about the different sort of regulatory agencies. I won't do too much of a deep dive in this because I think one of my colleagues is going to be doing this in the next in coming sessions. But at a very high level, these are the different sort of agencies in government that have one thing or the other to do with fintech business, and that the fintech will have to either get a license out or seek an approval form, make a filing to sign an agreement with the purpose of the operations, the purpose of an approval, for the purpose of cover, and if you look at this from the Nigerian Data Protection Bureau to the CAC to NICOM, NBA-ICLE, NIDA, Nigerian Information Technology Development Agency, the Federal Consumer Protection, Federal Competition and Consumer Protection Commission, NIBS, we're talking about NIBS already, the SEC, the Nigerian Communications Commission, the Central Bank of Nigeria, which is the apex financial regulator in Nigeria today, and of course the Ministry of Communications. But before I move on from this slide, I should have mentioned when talking about this different segment. One segment that I didn't mention in the last slide is around wealth creation and investment. And that's where the SEC comes in, because there are some fintech companies whose offering is around investment, wealth creation, diversifying one's portfolio, and things like that. And those agencies, those businesses are come under the regulatory purview of the SEC, which is an agency that protects the investing public, as users. So that's in a nutshell the architecture of the different agencies, the regulatory agencies that cover different aspects of fintech operations. But as I said, a deeper dive will be done into the scope of the power and the remit and the jurisdiction of these agencies, in the coming sessions. Next slide, please. So what are some of the buzzwords that you hear, that you might hear any of the presenters speak about? And of course, when you're talking about fintech generally, you have digital payments. Digital payments, what are digital payments? It can be two kinds. Digital payments, so when you pick up your phone and you want to pay your electricity, your utility bill, or you want to pay for your DSTV subscription, or your Netflix subscription, or you want to send money to your brother in university, or you want to send money to someone abroad, those are different kinds of payments. Broadly speaking, we call them digital payments. But if you break that down, we have what we call electronic payments and what we call mobile payments. Now, electronic payments are, just as the name suggests, any kind of payment transaction that happens on a digital or electronic channel. And when we say electronic channels, as I said, it means being made by a web or mobile device, being made by a web mobile device or a POS terminal or a POS transaction. Those are all different kinds of electronic payments. So it's about an originator, an instructor raising an instruction to a payment provider, a payment service provider, and I use that very loosely, to effect a payment transaction or to carry out a payment instruction. And that will involve a debit of the instructor's account, and a credit in the recipient's account. Of course, that's electronic payments at the broader scale, but as a sub-scale of that is then what we call sort of mobile payments. And those are really, domestic or cross-border payments that happen via mobile phone. So those that happen via your mobile phone are what we call mobile payments. But the broader head of that is what we call electronic payments. So that includes mobile payments, but includes other payments on other channels that are beyond mobile platforms or mobile channels. Next slide, please. Now, digital currency. I know this is one that might interest a lot of people. Key terminologies around currencies. We hear currency a lot. We hear cryptocurrency, we hear digital currency, we hear virtual currency, and sometimes they are used interchangeably. Sometimes they're used interchangeably, but they actually mean there are actually some lines in between them. Now, digital currency is a blanket term that refers to virtual currencies and cryptocurrency. So, digital currencies are, everything that you consider to be virtual currency and what we consider to be cryptocurrency. If we talk about virtual currencies, we're talking about digital representations of value, that are in electronic form, and those could be, unregulated digital currency issued by private issuer, or they could be regulated digital currency and virtual currencies, I beg your pardon, or those available within a small defined ecosystem, within a small loop or a closed loop. And then on the other hand, you have cryptocurrency. And cryptocurrency is virtual currency that is recorded on the blockchain, and so we talk about things like Bitcoin, Ethereum, and things like that. Those are cryptocurrency. They're usually issued. They're not issued by recognized regulatory authority. They're privately issued. Those are cryptocurrency, and they are slightly distinguished from what we consider to be virtual currency. Because in virtual currency, there you find that issuers are a bit more established, a bit more known. Of course, you would have your, we heard about central banks issuing, considering, exploring, the issuance of their own forms of digital currencies, as a direct derivative of the fiat currency in those countries. So some of the terminology that we have, and of course, and I know some of us may be aware about how the CBN has taken a view in relation to cryptocurrency generally, and how the CBN has also introduced the central bank digital currency, as a way of enhancing value for Nigerians generally. So that's generally one of the terms that we talk about when it comes to currencies. Now, some other terminologies around, and although this is not limited to fintech specifically, but a number of fintechs also come out of some of these, accelerators, angel investors, venture capitalists, and incubators. And these are just different members. These are all different component members of the wider technology ecosystem, of which fintech is a sub part of. And what's an accelerator? Accelerators are fixed term programs that where based on cohorts, early stage companies form cohorts and participate in accelerator programs as a way of accelerating their growth, helping them focus within a very short period of time on those key drivers that will help them scale their businesses and take the businesses off the ground, of course. And within an accelerator program, the founders of the business, the key promoters of the business, get embedded, derive mentoring, derive learning, they learn skills, learn mentoring, and have opportunity to mentoring and access, to a network that can provide those fundamentals that they need, that their businesses need to jump out onto the growth trajectory. Angel investors are usually investors that invest, in very early stage companies. Usually they take a bet on, they invest in a business even before the concept is even proven. They invest in a business at very early stages. Earlier stages, usually they come shortly around or shortly after friends and family have put their funding into the business. Of course, a number of fintech startups start out this way. That's why we're talking about angel investors, because angel investors are critical to helping a business access that needed funding to prove the concept, de-risk the product, and help the business along on its way. Of course, HNS are usually those who make a good return on investments when the fintech obviously explodes down the line. Now, venture capitalists, of course, they invest and they come in often at a time when the business has been sufficiently de-risked, concepts have been proven, and there's a measure of balance, there's a balance sheet, the business has, as I said, has been de-risked. So there's a client book, there are revenues that can be predicted, and then what venture capitalists do is they inject capital that will help the business explode. Within a very short period of time, usually they invest, and then they invest, and with a view to exiting the business down the line at the time at which that business ought to have turned a reasonable profit. And of course, incubators are collaborative ecosystems that help their participants, startup companies to solve problems in a collaborative manner, and often they usually have a takeoff spot for the participants, for the businesses that are incubated with them, usually for a longer period of time. They're usually, incubators are like accelerators, but are a bit more permanent. They invest a bit more long. They invest in the cohort participants a bit longer, and sometimes even make a financial investment, before the businesses sort of graduate or move out of incubation to the point where they can now sort of stand on their own. The reason why we sort of talk about these four ecosystem participants is that your average fintech, particularly in Nigeria, will have come across one or more or all of these different ecosystem participants. And it's important that as we understand fintech a bit more, we also understand, some of the different participants, some of the different players and stakeholders that they will have to engage with at some point in time, even as we learn and advise. Next slide, please. So, talking about some of the trends that we're seeing, in Nigeria. I think a few slides back we had looked at how what were the very earliest signs, what were the very earliest events, on the fintech sort of spectrum in Nigeria. But what are we seeing now? What are the signs we are seeing? What are they telling us? In terms of current trends. So number one is that we see a surge in lending and savings. In learning and savings products and businesses. There are a lot more players who are entering the space around providing lending solutions, business, loans and things like that, and different variations of that. I'm sure some of us might have picked up in the news. I think that must have been about 2 months ago, where the FCCPC cracked down on some unregulated players in the lending space. So there are those that have licenses issued by the CBN. They have licenses, they're regulated businesses, doing things properly, but there were a host of others who were not. And so that just shows, because there was a surge, in demand, obviously there was a surge in supply as well. We're seeing that there's a lot of appetite, around for products like that. Of course, next year we're seeing increasing partnerships. The fintech ecosystem, thrives on partnerships, thrives on collaboration. We hear about collaboration. Oftentimes when we talk about the conversation between traditionals and fintechs, we talk about collaboration a lot. So there's a lot of collaboration, there's a lot of partnerships. Fintechs are always signing up with partners, partnering with one entity, partnering with another entity, partnering with merchants, partnering with other financial institutions, just to provide more options to users, provide more greater efficiency, and to provide a wider reach. And so we see a lot of partnerships. And because partnerships, as I said, are the lifeblood of fintechs, we've now seen the CBN trying to get a bit more involved in how those partnerships are established and how they're created, how they're established, how they're performed, with a view to ensuring that there's no mismatch anywhere, and that the users are protected. Of course, we expect that we will see a lot more of that happen, particularly with the open banking framework that we know has now been issued. With open banking, we know that there will be a lot more collaboration. There will be a lot more handshakes, and collaboration will happen in the financial services space. 3 is we see technological innovation. We are seeing more innovative solutions. We're seeing a whole lot more. Routinely, we are seeing businesses thinking about new ways to provide a more efficient business, cover a loophole, cover a gap we're seeing a lot more innovation. Innovations are thinking overdrive, because they want to find ways to provide more value, leverage and create a market where one doesn't even exist. It's one thing for there to be a market and provide technology to sort of optimize the market a bit further. It's another thing to use technology to create a market where there doesn't exist. And we're seeing a lot of that, particularly in relation to fintechs. And we think that we will continue to see a lot more use cases, a lot more offerings, right in the back of innovation. And I think the CBN has also recognized that. And that's why we now have a sandbox that allows for a regulatory sandbox that allows for innovation to be tested, in a safe and live environment. We're seeing that because the CBN also recognizes that there is opportunity, and innovation will continue to happen as long as technology continues to evolve. Access to funding, number 4 here, access to funding. We're seeing that fintechs in Nigeria continue to enjoy, investor attention. We're seeing that a lot of investors continue to have seen the potential, given, as I said, when you take a look at, mobile phone penetration, you take a look at, the financial inclusion indices, and we take a look at, what is being done currently. And I think investors have seen that there is a space there is opportunity to do a lot more, and they're willing to put their money to support fintechs, take up the ground. So a lot more fintechs are accessing funding, a lot more fintechs are raising funding, to, as I said, to prove their concept, create new products, and to reach new markets. Number 5 is something that we talked about previously, which is about telco participation. As I said, hitherto, mobile telecom companies could not participate in the financial services space, but we're now seeing their entrance, the payment service bank licenses that they picked up now. We are seeing that they are likely to change the game. And the reason why we think they're likely to change the game is because these telcos already have an existing network. They have an existing framework and footprint across the country. And it's possible that, that with that framework, now layering on top of that framework, that distribution channel, that network, layering on top of that, some kind of financial services could potentially be the game changer that we're looking for, particularly when we talk about it in the context of financial inclusion. And those are some of the key trends that we're seeing, in Nigeria today in the fintech ecosystem. Next slide, and I think I'm beginning to round it off now. So what are some of the key gaps that we're seeing in fintech in Nigeria? What are the gaps? What are the things that we would like to see improved upon? We'd like to see improvement, we'd like to see enhancement. One is access to information. There is no sort of established, database where we can access, we can access, to get some kind of information. I know my brother Davidson is very, very involved with the Nigerian Startup Bill, and that is designed to address some of those concerns. Of course, regulation has always been a key one. When you talk about regulation and you talk about innovation, usually regulation is always playing catch up, but what we're looking for, what I think still needs to be done is a situation where we have enabling regulation that enables innovation, that allows innovation to thrive, and that doesn't stifle, that provides and that encourages it, but is also attuned to the Nigerian peculiarity and Nigerian context, and that's one area that we're looking to see enhancing regulation. We're seeing some bright spots, from some government agencies, from the SEC and a few others, but we want to see that a bit more pervasively. Of course, corporate governance limitations. Now, when you look at the companies, the tech companies, businesses themselves, as I said, because there's a lot of innovation is just, on the rise, there's a lot more effort and focus and attention paid to, innovation, over and above, other important things like corporate governance, structure in the business, proper business ethics, and things like that. And that has a way of catching up and affecting the sustainability of some of these businesses because, it's one thing to have a brilliant product. It's another thing to, to be able to have that product properly managed, in a way that can deliver value to everyone involved. I was reading very recently, that Sheryl Sandberg, who's used to be CEO of formerly Meta, formerly Facebook, recently stepping aside after almost 2 decades, about 2 decades. I remember, reading what CEO of Facebook, Mark Zuckerberg, said about Sheryl, that Sheryl joined the business at a time when Facebook was just an idea, a promising idea that would change the world, but it didn't have the structure of the business around it. And part of what Sheryl had to do, at that time, was to put some structure around the business. And that just shows the importance of, having the right business structure and corporate governance, and accountability and management around a business, because that is what helps the business's sustainability, beyond the brilliance or the viability of the idea in itself. Moving on from that, of course, is intellectual property and intellectual property rights. Of course, very closely linked to technology and technological innovation is intellectual property, and how it's important. It's important that we see that there's a better appreciation of how intellectual property has a handshake with technology and what it can mean, for investors, founders, promoters, in the ecosystem. Of course, there's the skills gap, the issues around the skills gap. Oftentimes when I talk to tech founders or tech owners, tech business owners, they always say things like, recruitment, resourcing is always in the full contact spot, because finding the right kind of talent, to provide and stability, to provide, knowledge, capture knowledge transfer, are things that are critical. So these are one of the areas that, we think are, we need a collaborative effort towards trying to resolve and improve, because the more attention is given to these things, the more effort that is being made to address some of these things, the more mature the fintech ecosystem in Nigeria will be. Next slide. I think that brings me to the end of the presentation. I think just on the money. I will be happy to take any questions that I may have dropped in the Q&A box. Thank you very much to Kofo or to Bernard to sort of run that process. Thank you everyone for listening.
Thank you, Dami. I'll comment after Kofo, after question time. But Kofo, please, can you take question time? Thanks. Kofo, we can't hear you. You're muted.
Apologies, I didn't know I was speaking to mute. Can you hear me now?
Loud and clear. Thanks.
Okay, so I'll just thank you, Mr. Salau, for this very insightful session. Personally, I learned a lot, and I hope the listeners also learned one or two things. We have about 8 questions in the Q&A box, and if perhaps you dropped your questions in the chat box, kindly transfer them to the Q&A box. Just to say that any questions that are regulatory facing will be addressed in the subsequent presentation. So I won't be asking any questions that are on the regulatory aspect. Okay, so we have a question here that I find very interesting from Henry. It says, appetite is high, partnerships are being forged daily. Feelers are that government policies tend to suffocate the diffusion of fintech innovation. They have 2 questions in one. One, do you share these views too? And how can we lawyers advise our clients better in order to incubate the innovations from adverse government policy?
Okay. Thanks, Henry. So my understanding of the question is that we have partnerships that are being forged very frequently, and government policies tends to suffocate innovation. Why share that view? I think what I can say is that government policy can enhance. So I would say government policy can do, there's a bit more that can be done for government policy to enhance innovation. But I won't say, and I think that perhaps if we are to be fair to some of the government agencies about some of the policies that they put in place, maybe some are driven by larger economic considerations, and based on their statutory mandates, maybe by larger considerations. But I do think that perhaps more can be done to enhance in a positive way, the innovation that we are seeing. I think the second question is how lawyers can advise clients to better incubate their innovation against government policies. So I think the first thing that is important, one thing that we do, is to when a client has a product offering, that they want us to advise them, one thing we try to do is to help them understand how the product sits within, the regulatory framework on ground as it is today. And I think what we can do as lawyers is to help the client, fine tune that product. So if, for example, there's a component of the product, there's a component of the service, that is not within the contemplation of the law, of the rules, or that sits outside, or a component of the product that sits within, partly within and partly outside the framework, to help the client understand why that is a potential gray area and see how they can achieve their objective, whilst staying within, the realm of the norm. I'm going to say the realm of the regulatory norm. Of course, sometimes when the client is aggressive about, that aspect of the product, because it's a game changer from that's the key distinguisher between what exists and what doesn't. We can often, as lawyers, we can work with our clients to engage the regulator to see, if something like that is achievable, is possible, and I think with the regulatory sandbox framework that we have now, it's become much easier these days to be able to have that engagement, for what strays into the realm of the unknown.
Thank you. Adiola would like you to clarify the difference between venture capital and private equity.
Thanks, Adiola. Venture capital is a kind of private equity, but I think when we talk about venture capitalists, the venture capitalist is a type of private equity. But venture capital usually fund earlier stage businesses. We find venture capital going into earlier stage businesses, taking a bit of a greater risk. Venture capitalists take a greater risk than the traditional private equity funds because they are they're investing in a business that has not quite, has not fully matured, is what I'm looking for. And so they invest in very early stage. Usually venture capitalists usually back the founders of the business, and the ability of the founders to deliver on the business idea. Whereas with private equity actually goes after more established businesses, more mature businesses that are plateaued at a point and are now looking to sort of, move to the next level. And in that case, their only requirements often is the capital that they need, and maybe some level of managerial sort of support or intervention. But usually, a venture capitalist will invest in a business and leave the founder of the business to sort of run. But a private equity investor usually will invest because at that point, the business already exists up to a point, it's been operational at a particular level, but then requires capital to take it to the next level. And so there usually is capital that is injected by the private equity investor, and then some managerial support is usually introduced. That usually comes with private equity funding that we don't usually see. That is not typical of venture capital funding.
Just on the back of that question, a question that's closely related. It says, what is the role of lawyers in accelerator and incubator stages of a startup? And is a startup expected to register with all the regulators?
Let me take the second question first. No. So a business will only be required to register with a regulator if that business is carrying out a service or is providing a product that is regulated by that regulator. And so, so beyond your general government agencies like your CACs that apply to all companies in Nigeria, or the SEC that applies to most or all, investment-related businesses. A company that was providing payment solutions, for example, will not be required, purely payment in its purest form, will not be required to register with the SEC, but it will require to, of course, establish with the CAC before you can get a license from the CBN. So you're only ever required to register if the service you are providing is regulated activity and regulated by a government agency. Apologies, the first question.
The role of lawyers in accelerator and incubator stages of the startup.
What incubators, as I said, and some accelerators provide, they provide support to a business, in the very early stages and try and help it to grow and take off the ground. And I know what most incubators do is they provide an environment where those businesses can access, some critical services that perhaps they would not have been able to access on their own outside of the incubation framework. So often we would see incubators provide, business mentoring, advice, support and advice around business plan writing, market capturing, market identification, financial advisory, tax advisory, and sometimes legal advisory. And so we've been part of, and I've been part of, an incubator providing support from a legal perspective, to businesses within its code. So as lawyers, we can, legal services can be oftentimes one of the services that are provided to businesses in incubation, in terms of doing the right thing, registering intellectual property, putting in place the appropriate kind of contracts, and things like that. Those are some of the services that can be one of the legal requirements of businesses in incubation.
Thank you very much. We have a number of questions here. I think we really have room for 3 more. Okay, someone wants to know if fintech development, or is fintech development applicable to asset tracing for investigation and prevention of proceeds of crime?
Is fintech
deployment applicable to asset tracing for investigation and prevention of proceeds of crime?
What I will say to that is that I do think that because technology is a catalyst and an enhancer, I can see how technology can make it easier for a law enforcement agency, investigating certain financial transactions. I can see how technology can make it easier and more efficient, perhaps make it even more surgical to trace and follow proceeds of crime, as part of an investigative process. So I can imagine that, fintech may make it easier. So if you just think about it in its crudest form, in the days when, illicit behavior or criminal behavior was carried out, even on financial transactions, most of those were happened offline rather than online. The technology now, I think it's maybe easier to track that kind of behavior and then to investigate and follow through with it.
Thank you. This question is very interesting. It says, are lawyers expected to register with any of the regulators in order to serve the fintech company? Are lawyers expected to register with any of the regulators in order to serve the fintech company?
No. Once you are qualified as a lawyer, you are able to advise, because every lawyer, we don't study fintech in school. We study law, and as a lawyer, you're qualified. So all that is required is to be part of fora like this, where you can upskill, learn a bit more about the industry, read a bit more. And the more you know, the better position you are to be able to advise on some of those specifics But if you unpack everything we do down to its, its basis, it's really either the law of contract or something else similar.
This question is: what is your take on the attitude of the CBN to fintech platforms, especially with fintechs that provide credit or saving facilities?
I wish Nadosia was a bit more specific on the attitude of CBN to fintech platforms. What I can say is, since in the last, 4 or 5 years, I would say that the CBN's approach has changed. To be honest, has changed for the better, because at some point we had, multiplicity of regulations, multiplicity of licenses. There were all sorts of frameworks all over the place. But the CBN, I think, has done well in the last 1 or 2 years to try to streamline things. We now have the new license circular, calculation circular that tries to collapse things, makes things a bit more streamlined. And I think that makes it easier. In terms of credit or savings facilities, again, I wish you had been more specific, but so I really can't answer that question.
Okay, so this is the last question we'll be taking in the interest of time. Sorry, the questions keep coming. Someone is asking that, considering the clampdown of the FCCPC on savings and investment agency, what is the most appropriate registration by FCCPC on savings and investment agency? What's the most appropriate registration recommended for them to avoid such clampdown?
Savings and investment agencies.
Yeah.
That's a bit difficult. FCCPC clamped down. What I do know, FCCP, as I said, came down on the illegal, unlicensed lending institutions. I think the question was around savings and
investment agencies.
Yeah. So what I will say is savings, the business of taking deposits and investment is regulated activity, regulated by CBN on one hand, regulated by SEC on the other hand. And so no business, or we should not be, as lawyers, should not be advising our clients to make investments with unlicensed, unregistered, unregulated entities. What I did say, what I am familiar with FCCPC clamping down, as I said, was really around lending institutions and unregistered lending institutions, and how they sort of defraud and mislead consuming public. Maybe if that question can get a bit more detail offline, we can answer that.
All right.
This time.
Yes, it's time, and that's all the questions we can accommodate at the moment. Thank you for your participation.
Thank you very much, Toriola. Thank you very much, Dami. Thank you for the very brilliant presentation, and thank you for answering all the questions the way you did. Very interesting, very incisive. I think it's quite interesting that you closed your session by touching on the challenges faced by within the fintech space, and then also looking at what it would take for the ecosystem to mature. And I think in that, more than anything else, lies where the work for the lawyer is. And I know that people always talk about the opportunity for lawyers in all that we do. But it was interesting to hear your perspective about some of those challenges, including around governance and setting up structures and issues relating to intellectual property rights and others. Quite interesting, Dami. Quite interesting. Thank you very much for your help. By the way, Dami Olaya is the dean of this faculty and did a lot of work regarding the content development and also assembling the faculty. So Dami, we're very grateful to you for that, and thank you very much for the brilliant presentation.
Thank you, Tibina. Thank you everyone for listening. I'll do my best to keep answering questions in the Q&A box whilst the other sessions are going on. People can read responses to the questions. Thank you.
Thank you very much. You guys.
For the next session.
Thank you very much, Dami. Thank you. So Before we move on to the next presentation, I would just say a big thank you to all our partners on this session. Of course, the Nigerian Liquefied Natural Gas team, the Legal Learning Academy has been quite helpful, and in putting this together, we're grateful to them. We're grateful to Win and Emery, the US arm, for yesterday's sessions. And then again, of course, TMP and ILEX. So thank you very much. So I'll very quickly introduce the next facilitator for today. Babajimi Ayorinde. Babajimi is a founding partner of TMP and heads its Fintech team. He has advised on several transactions that have been instrumental to the increased adoption of electronic and mobile payments in Nigeria. He has an excellent grasp of the fintech regulatory environment in Nigeria and regularly advises clients on licensing and compliance issues. Babajimi graduated from the University of Lagos in 1998 with an LLB and was awarded the Dean's Prize in the same year. He was admitted to the Nigerian Bar in 1999 and attended the University of Warwick, England, where he obtained an LLM in International Economic Law with distinction in 2005. Babajimi will be discussing an overview of the Nigerian fintech regulatory space. So it's my pleasure to welcome Mr. Babajimi Ayorinde. Babajimi, the floor is yours.
Thank you very much, Tobena, for that introduction. And just before I start, I would like to thank the ICLE and the NLNG for the opportunity to speak at this session. So Damilola has made my work easy, and he's made my work easy because he has essentially talked about the history of fintech in Nigeria. He has talked about the various segments of the fintech ecosystem in Nigeria. He has taken us through the key terms, and he has also told us about the trends that are going on in the fintech space in Nigeria. So what I am going to try to do is to talk to you about the regulatory framework. So who regulates fintechs in Nigeria? What are the laws that they have to comply with? What are the regulations that they have to deal with on a daily basis? So we're going to spend the next couple of minutes talking about that. So I'll just quickly give you my own definition of what a fintech is. And it's not too different from what you've heard earlier. Fintechs are essentially companies that provide financial services to their customers by leveraging heavily on technology. I've had someone ask me before that, so going by this definition, that means even the traditional banks that we've had all these decades in the country qualify as fintechs because they do use technology, and that's a fair comment. But I think the key difference is that the fintechs, right, use technology more predominantly than the traditional financial institutions. And you can see that when you contrast the way the traditional financial institutions operate, they rely heavily on their brick and mortar infrastructure, whilst the focus of fintechs is really to get their services to their customers, right, by the use of the customer's computers or the customer's mobile devices. Damilola has already told us about the various segments, and I'm not going to dwell too much on that, but in the rest of this presentation, you would hear me talking a lot about the mobile money companies, the payment companies, wealth management, and also the lending ecosystem. Now, there isn't a single statute that is devoted to the regulation of fintechs. So when you look at industries like the telecommunications industry, for example, where you have the Nigerian Communications Act that is devoted 100% to telecommunications, or if you look at the power sector, where you have the Electricity Sector Power Reform Act, which is dedicated solely to issues around power. You don't have that with fintech. We also don't have any identifiable body of laws that you can refer to as fintech law. I know the term is gaining a lot of traction these days, and I hear a lot of lawyers saying, young lawyers especially, saying, I want to be a fintech lawyer, which is great. But the reality is that you don't have that body of law the way you would have the law of torts or the law of contract. What we loosely refer to as fintech law today, right, is actually bits and pieces of different areas of law that have now come together to guide and regulate the way fintechs carry on business. The fintech industry, not only in Nigeria, but worldwide, is still evolving. They're constantly innovating. And what we find is that most of the time, the law is playing catch up with them. So let's talk about the key pieces of legislation that are relevant to fintechs and their businesses. The first, and I guess the most obvious one, is the CBN Act. That is the act that creates the Central Bank of Nigeria. If you look at that act, one of the objects of the central bank is to ensure stability in the financial system of the country. You also have the BOFIA, which is a more detailed legislation in terms of financial institutions and other financial institutions. It essentially gives the central bank the power to license financial institutions and to regulate them. Then you have the Nigerian Communications Act, which deals with the provision of telecommunications services in the country. And what you would find with fintechs, I mean, if you go back to the definition I gave you, that they're providing financial services to their customers by leveraging heavily on technology. You find that invariably they deliver their services with the aid of telecommunications devices, mainly their computers and mobile phones. So, of course, the provisions of the Nigerian Communications Act are very relevant to their activities. Copyright Act, some people might be wondering why that is there. A lot of fintechs, right, have to develop or at least improve on software, right, in order to deliver their services. And for those of us who have who practice intellectual property law, you know that software code is protected by the Copyright Act. Fintechs, the fintech business is also very, very knowledge-based. So you find out that the greatest assets of these companies are usually their people, right? And after their people, it's their intellectual property. Their trademarks, right, are very important to them. And as such, we find that one of the first things they do once they set up is that they try to protect their brand by registering their trademarks. So if you're a fintech lawyer, if you work in this space, you would find that you'll be interacting a lot with the trademarks registry and making use of the Trademarks Act. Then there's the Nigerian Data Protection Regulations, the NDPR, as it's commonly called. That is relevant because a lot of fintechs deal with personal data of their customers. And what the NDPR seeks to do is to protect how this data is used. Every time you want to make an online transaction and you pay with your card, right, you're giving some fintech somewhere your card details, your full name as it's written on your passport, your email address, your telephone number, and all these data have to be protected in accordance with the NDPR. So that piece of regulation is very, very relevant to the fintech space. Money lenders laws are also relevant, especially to those who are operating in the lending space. And I'll talk about that later on in this presentation. So some of these regulators are obvious, given that I've already highlighted the key pieces of legislation that are relevant in that industry. The CBN plays a very huge role in the fintech industry as a regulator. The Nigerian Communications Commission, NCC, is also a key player. Then you've got NIDA because of the protection of personal data. The Nigerian Insurance Commission, Damilola talked about how we're now seeing insurtech companies in this ecosystem. And the National Insurance Commission is the government agency that regulates the insurance industry. SEC is also a regulator. They deal mainly with investments, and I'll speak more about that later on in the paper. State governments are there because of the money lenders laws. I'll expand on that too. And then the NFIU, which is the Nigerian Financial Intelligence Unit, is also a regulator that fintechs have to deal with because obviously one of its functions is to reduce incidences of fraud and money laundering and gathering the necessary data to help combat these crimes. So two other pieces of legislation that I haven't mentioned are the Money Laundering Prevention and Prohibition Act, and I'll explain later how they're relevant, and then the Nigerian Financial Intelligence Unit Act 2018. So what are the regulated activities in the fintech space? If you're a fintech and your business involves the taking of deposits, right, then you are going to have to deal with the CBN. You need to be licensed with the CBN. One of the primary functions of the central bank is to protect the deposits of members of the public in financial institutions. If you are providing mobile money services, which would include the provision of e-wallets, electronic wallets are essentially digital bank accounts, they're virtual bank accounts. They help you store value without you necessarily going to a traditional bank. If you're involved in payment services, then you're also going to need a license from the central bank. Now, why is the NCC relevant to fintechs? It's because one of the most common channels by which fintechs deliver their services is what we call the USSD or short codes. A lot of us are used to going onto our mobile phones and typing star whatever number hash, and through that we're able to connect with the servers of some of these fintechs and access their services. In order for you to be allotted or allocated a short code, and in order for you to use it to deliver your services, you need to get what is called a VAS license from the Nigerian Communications Commission. VAS stands for Value Added Service License. But I did note in my slides that mobile money operators are exempted from getting this license because the central bank and the Nigerian Communications Commission have entered into an MOU that has decided to spare them this double regulation. I must add that this is actually very commendable. It's nice when you see regulators cooperating with each other and working together to carry out their functions. This makes the compliance risk much less for the fintechs, and obviously the workload in terms of compliance drastically reduces. So once again, if you're a fintech and your business involves you collecting data, personal data of your customers, and you meet the thresholds that have been provided for in the NDPR, then there are certain obligations that will require you to deal with NIDA in one way or the other. I think Damilola already explained what NIDA was in his presentation. Now, if you're providing stock brokering services, wealth management services, if you're into collective investment schemes, or if you're into crowdfunding, then you will have to deal with the SEC and even get a license in some instances from the Securities and Exchange Commission. Now, where do the state governments fit in this jigsaw puzzle? In order for you to lend, right? Okay, so let me put it this way. Lending is one of those areas where the federal government and the states share jurisdiction. Most states in the country have money lenders laws that allow the state governments to license people to lend money. And the trend that we have seen in the fintech space is that because a lot of these fintechs start up as very lightly or thinly capitalized businesses, they do not have the quantum of shareholders' funds that are required by the central bank to get one of the central bank issued licenses that allows them to lend. So what a lot of these fintechs do is that they start off at the state level. They start off by applying for a money lender's license under the money lender's law of the state. And they operate as a money lender in that particular state for the first couple of years. And as they grow and they scale their business, then they apply for one of the central bank licenses. It's something we've seen happen a lot, and I think it's a very, very good way for fintechs to grow their businesses gradually whilst reducing cost and reducing the burden of regulatory compliance. What do these fintechs do? What licenses do they go for when they decide to upscale? What we see is that a lot of them apply for microfinance bank licenses under the CBN's regulations and guidelines. I've already talked about the National Insurance Commission and how it regulates the insurance industry. One of the things that the National Insurance Commission has tried to do in recent years is to promote what they call microinsurance. And microinsurance is an insurance product, or their insurance products that are targeted at the base, the bottom of the insurance pyramid. Insurance penetration in Nigeria is ridiculously low, and there's a drive to ensure that more Nigerians make use of insurance products. So because of the low-cost nature of microinsurance, what we see is that a lot of these microinsurance companies are delivering their products through technological means. And what it does is that it reduces their operating costs. They don't need to go and rent buildings or branches all over the country. So NICOM is becoming increasingly a very important regulator in the fintech space. I have not by any means mentioned all the regulators that a fintech company will have to deal with in its existence. What I've just tried to do is to highlight the key ones, the most important ones that they'll probably have to deal with regularly. But trust me, there are loads of other regulators that they would have to deal with depending on types of services that they provide. Now, I'm going to try to focus on two types of operators in the fintech space. If I were to talk about every single type of fintech business, we would need like 2 days for that. So what I've tried to do is to pick two of the most, two of the most common ones, two of the types of fintech companies that Nigerian consumers will probably have to deal with one way or the other in their daily existence. So the first type of fintech that I'd like to just drill into a bit is the mobile money operator. A mobile money operator is a fintech company that provides financial services to its customers by allowing them to use their mobile phone numbers as a unique identifier as opposed to a bank account. And for those of us who know a bit about mobile money, we would have heard about M-Pesa in Kenya, which is probably one of the first mobile money companies in the world. And what M-Pesa essentially did, and which a lot of companies around the world have tried to replicate, is that it has basically allowed people who ordinarily would not have had access to banking facilities, to banking services, to use their mobile phones, right, as essentially bank accounts. And they do this by creating electronic wallets where people can transfer money, right, and store value for themselves without necessarily having to deal with the bank. How do mobile money operators do this? They do this by operating very vast agent networks. They are able to go into places and reach into places that traditional banks cannot go into because of this agent network. So you see a mom and pop shop, somebody is selling sweets and all that, but at the same time, he's got a POS beside him and he's acting as a mobile money agent and receiving deposits on behalf of mobile money operators. They also help with money transfers. So in unbanked rural areas in the country, people can go to a mobile money operator agent, right, and hand over money to the agent and their mobile wallet gets credited. Mobile money operators are regulated by the central bank, and there are quite a number of regulations that mobile money operators have to deal with. I've highlighted 4 of them here. The first one is not really a regulation. It's a circular issued by the central bank, which essentially highlights or lists the types of license categories available. In this circular that I'm referring to, which was reissued in 2020, mobile money operators license is one of the categories that the CBN has catered for. The CBN has a regulatory framework and guideline for mobile money services, which was issued in 2021. So anybody interested in, anybody advising a client in the mobile money space, do well to be familiar with those guidelines. Yes, and then there's a very interesting one, the NDIC deposit insurance guidelines on mobile payment systems. So I'm sure a lot of us will know that when we deposit our money with the traditional banks, our money is insured by the NDIC up to a certain limit. And for a long time, mobile money companies were operating, and there wasn't a similar type of insurance policy that protected the monies of mobile money customers in their e-wallets. This posed a huge risk because there was this fear that if any of these mobile money companies went down, would the depositors or the users of their services lose their money. So the NDIC has come up with a scheme now that has essentially extended deposit insurance to mobile money operators, even though that they are not banks within the traditional definition of the banks. And I think it's a welcome development because it helps to keep our money safer. Then there's a CBN regulatory framework for non-bank acquiring in Nigeria, which applies to mobile money companies too. There are a few more, and those lawyers who work in this space would realize that you need to constantly be on top of your game because the central bank issues circulars and guidelines so often that you just can't afford not to know what's going on in the space. So there are other regulations and guidelines that affect mobile money operators. There's CBN guidelines for the regulation of agent banking and agent banking relationships. There's also the central bank anti-money laundering and combating the financing of terrorism in banks and other financial institutions regulations. That's a mouthful. essentially, right, a lot of these fintechs, not all of them, but quite a bit of them actually take money or process huge payments on behalf of either customers or on behalf of merchants, other service providers. And there is the concern that if they are not properly regulated, their services could be used to launder money. It could be used to help finance terrorism. So the central bank has come up with these regulations, which essentially guide and give instructions on what these fintechs are supposed to do when they notice suspicious transactions or when transactions above a certain level or quantum are being carried out. There's also the CBN regulatory framework for the bank verification number, which we all call BVN. And it also has requirements for a watch list, a BVN watch list, which fintechs are supposed to comply with, those that are regulated by the central bank. And then for some of these fintechs who are into payments, which in a way would include mobile money operators, they also have to comply with the relevant card scheme rules. And card scheme in this context, I guess the two most popular card schemes that we know are Visa and MasterCard. So quite often, fintechs have to comply with their rules, and it's important that if you operate in that space, you're also familiar with them. Now, the second type of fintech that I would like to talk about is the payment service provider. A payment service solution provider is a third-party company that assists businesses to accept a wide range of online payments. If you think back to the days when you couldn't buy anything unless you physically went to the person you were buying from, the merchant with a bundle of cash, what this type of fintech has done is that they've tried to simplify the process. They've allowed us to sit in our homes, sit in our offices, and basically use our cards or transfer money from our bank accounts electronically and purchase goods and services. So that's the role that a payment solution service provider plays. Now, a PSSP is regulated by the central bank, and in terms of the regulations that apply to them, there's a CBN circular on the new licensing categorizations. That again is the circular that itemizes the various licensing categories in the payment space, and the PSSPs is one of those categories in there. Then there's the CBN guideline on the operation of electronic payment channels, right? And then you have the CBN guidelines on the point of sale card acceptance services. There is a letter by the CBN, right, which technically is not regulation, but it's also important because it gives you an idea of the way your regulator is thinking and what they expect from you. And it's on the reduction of the period for ATMs and POSs and web transactions. It's a guideline that deals with how they operate their electronic payment channels. Once again, money laundering is a key factor in the payment services space. So the CBN's anti-money laundering and combating of financing of terrorism in banks and other financial institutions regulations is relevant. And then because the payment service providers quite often process payments that go through card schemes, they're also required to comply with these rules. So you would have noticed that a lot of the things I've talked about relate to CBN, and I guess it's because the central bank is probably the most dominant regulator when it comes to fintech. But SEC is also increasingly playing a role in the regulation of fintechs. And that's because a lot of the services that traditional capital market operators were providing are now being provided through technological means. So SEC has rules on the issuance, offering platforms, and custody of digital assets. I think Damilola alluded to this. We know the position of the central bank, or the view that the Central Bank of Nigeria has taken with regard to digital assets and crypto. But what a lot of people don't know is that before the central bank came out really hard on crypto, the Securities and Exchange Commission was actually working out and looking at ways to regulate crypto and digital assets and bringing them into the formal financial sector. And these rules were actually created in a bid to achieve that. SEC has rules on incubatory guidelines for specific categories of fintech entrepreneurs. And what SEC has essentially tried to do there is to create some kind of regulatory framework that allows fintechs to develop products within a regulatory environment, whilst at the same time reducing the risk that these products might pose to members of the public who patronize them. SEC has also introduced rules on crowdfunding, and for those who don't know, crowdfunding is essentially various retail investors, right? Usually not high net worth and not professional investors, who come together and pool their money together to invest in a particular venture. SEC takes the view that this is some form of a collective investment scheme, and it has introduced crowdfunding rules to deal with that. SEC has also issued a statement on digital assets and their classification and treatment. Like I said, these things were probably more potent before the central bank came down hard on them. But it's good to know that those efforts were actually in place and that they exist. Now, before I end this presentation, I think it's important to actually talk a bit about what has been tagged the startup bill. The startup bill, I think, is a commendable effort, and what the government has tried to do with the startup bill is to look at the various problems. And by the way, when I say startups are not restricted to fintechs. A lot of fintech startups, they start their lives as startups. But I mean, the term startup in terms of the bill goes way beyond fintech. But what the government has tried to do is to look at all the various laws that affect these young and budding companies, and has tried to come up with a piece of legislation that will help create an enabling environment and make it easier for them to operate. It's still in the drafting stage, and there are consultations going on, but it hasn't, I don't even think it's been presented to the National Assembly yet, but I think it's something that one should keep an eye on, and see how it goes. So I think I will stop on that note, and I will be happy to take any questions. Thank you very much.
Thank you, Babajimi. Kofo, over to you. I'll comment at the end.
Oh, hi, good afternoon, everyone again. And thank you, Babajimi, for your session. I'm sure that every participant living now will be very aware of the laws that govern fintech in Nigeria, especially because of how many and diverse they are. With the presentation, you've been able to sort of harmonize them. And so I'm sure if they get hold of your slides, it'll probably be a one-stop shop for regulations in Nigeria. So we have some questions and some of them spilled over from the initial session. And first one is, someone's trying to understand the distinction between the Nigerian Data Protection Bureau and the NICTA.
Okay, so I think this is the best way I can explain it. NIDA is the agency of government that was set up to promote technology, right, in every facet of our lives in Nigeria. As the name suggests, Nigerian Information Technology Development Agency. But in the course of its activities, right, NIDA has seized on data protection, right, as one of the areas in which it wants to regulate, and it wants to protect the personal details and personal data of Nigerians. And what they've essentially done with the Data Protection Bureau is to create a unit, right, that is dedicated fully to data protection. And I think what that does is that it frees NIDA up to carry out its other functions without the distraction of regulating data protection. So they've created this bureau and they've appointed a DG, a Director General, who oversees it. But for all intents and purposes, it is still part of the framework of NIDA, and it is still ultimately answerable to the Minister of Communications.
Thank you very much. Just to mention again that if you have questions, please put them in the Q&A box. So someone wants to know, this question is, under the BOFIA regulations, can one interpret that PSPs are financial institutions? Okay, this question it's a very voluminous question, but I will try to summarize as much. So the person really wants to know if the Money Laundering Prevention and Prohibition Act of 2022 will apply to PSPs. I think that's the crux of the question. If the BOFIA regulation, so if by BOFIA regulations are PSPs financial institutions, if yes, or depending on the question, would the Money Laundering Act apply to such PSPs?
Okay, so my short answer is that yes, I think PSPs qualify as financial institutions. They do take deposits, even though they are not allowed to lend. They facilitate payments. And once you have a combination of those two things, right, there's always the risk that their services or their infrastructure will be used for money laundering or be used to finance criminal activities. So they are brought within the purview of the money laundering laws and regulations, and they'll be required to comply with them.
Thank you. I can see some data protection specific questions as well as anti-money laundering specific questions. So just to note that the next session after this is going to be on anti-money laundering, and that will also be addressing data protection tomorrow. So kindly ask or re-ask your questions during either of those sections so that we don't take away from the current section. The next question, someone is asking, just a minute. Okay, so someone said, what licenses are to be gotten from regulatory bodies for fintech companies starting up with license from states for money lending? So I think what the person is saying, he wants to know what regulatory bodies govern money lending and where a money lender or potential money lender can get a license.
Okay, so like I said, money lending is basically state-based. So most states have their money lending laws, and those laws determine which of the agencies of the government of that state regulates money lending and issues money lending licenses. I practice in Lagos, and that's the jurisdiction I'm familiar with. And I believe the ministry, right, yes, that is in charge of issuing money lenders licenses in Lagos State is the Ministry of Home Affairs. So you essentially have to apply to the Commissioner for Home Affairs in Lagos State. Was that one part of the question? Was there another part to that?
No, that was really all the question.
Yes. I can't speak for other states, but I'm sure the money lenders laws in each of those other states will specify the government agency that you apply to.
Okay, thank you. Someone would like to know if the SEC's position on digital assets is a statement or a rule. Said it would like you to clarify because he understands that some rules were recently shared.
So how do I put this? There's a lot of uncertainty in that space, right? You have the apex regulator in the financial services industry who has come out and has essentially said that, or has indicated that it's not in favor of this class of assets, and has even gone as far as issuing its own type of digital currency. And it's prevented financial institutions that it regulates from even processing or facilitating transactions in respect of these types of assets. So there's a huge question mark, right, about any rules, any guidelines that are being issued. The reality is that when the statutes that set up these government regulatory agencies were enacted, digital currencies were not a thing. So you're not going to find any statute that says SEC or CBN has the power to regulate digital currencies. Essentially, we're all making it up as we go along, but effectively, the central bank has put a freeze on those types of assets in the country at the moment.
Thank you. The next question is, how is fintech-related capital market transactions regulated, especially with regards to possible Ponzi schemes?
Okay, so if you recall when I started my presentation, I said, look, you're not going to find any statute that is devoted, right, to fintechs. What has happened over the years, and it's understandable because the nature of technology is that it changes pretty fast, and regulators, and it's not just in Nigeria, really, regulators are usually a few steps behind. So what has happened is that a lot of these rules get made as they go along, and what a good fintech lawyer will do is to take the existing law and try to adapt it to the specific situation of his client.
Thank you. So unfortunately, we will not be able to attend to all the questions as we have one more session today, but I will just take one more question. Sincere apologies for that. So Olamide would like to know if an online money lending platform requires registration with both the CBN and the SEC.
So SEC doesn't regulate lending, right? So I don't, at least off the top of my head, see the need for a SEC registration unless there's some other feature of the product that is being provided that spills over into the regulatory terrain of SEC. For lending, the options that are available either to apply at the state level for a money lender's license or to apply to the central bank for one of the license categories that allows lending. But I should also make a point here that if you choose to go down the road of applying for a money lender's license, which is issued to you by one state, because by law, states do not have jurisdiction beyond the borders, the boundaries of their states. It's questionable if you can provide your services online, right, or through electronic devices to people who are resident or based outside that state. So, I mean, if you're planning to operate nationally, then it makes sense to get the license that is issued by the central bank rather than a license that is issued by a state.
Thank you very much. I'll now be handing over to Tobina to take it from there. Thank you, everyone, for the questions.
Thank you very much.
Thank you very much, Babajimi, for that very excellent presentation. Particularly enjoyed it, very calm. And you went through the entire gamut of the regulatory framework for fintech operators in Nigeria. And this is really good. So thank you very much for your kindness and for the time that you've taken to prepare your paper and for the brilliant presentation. We're very grateful. And I must thank your partners at TMP for letting you avail us of your time.
Thank you very much, Tobina. It's been a pleasure. Thanks for having me.
Thank you. And I must say to participants, just to always remember to say a big thank you to our facilitators. The time they spend preparing for the sessions and indeed the time they spend delivering the sessions are not paid for. It's purely voluntary, and we're grateful for that and for their enthusiasm for promoting knowledge amongst with colleagues. So fantastic. So thank you, Babajimi. And we'll now be going to the last session for today, which will deal with anti-money laundering, combating the financing of terrorism, risk and compliance for fintech companies. The facilitator for that session is Davidson Oturu. Davidson is a partner at the firm of Alex, a full-service law firm with offices in Nigeria and Ghana, and heads its media, telecommunications, technology, and intellectual property practice groups. He's a member of the American Bar Association International Section, the International Bar Association, the Chartered Management Institute UK, the International Technology Law Association, the International Trademark Association, INTA, the UK Chartered Institute of Trademark Attorneys, the Intellectual Property Law Association, and the Chartered Institute of Arbitrators UK. He has been ranked by IFNR 1000, Legal 500, Who's Who Legal, Chambers and Partners, IP Stars, and the World Trademark Review, WTR 1000, as a leading IP, fintech, and technology practitioner. He has also been recognized by Chambers and Partners in his Global Fintech Guide as a leading expert in fintech and technology matters. He serves on different government and private sector committees. He's the chairman of the Legislation and Regulation Committee for Middle East, Africa, and Asia at the INTA, and is also a member of the task force on IP in space. He's a member of the committee set up by the Securities and Exchange Commission to create a roadmap for the use of fintech in the capital market. He serves as an advisor to several organizations, including tech-enabled startups, and mentors entrepreneurs and founders on regulatory, compliance, IP, and startup-related issues. He's also presently a mentor at the Founder Institute, an international pre-seed accelerator. He has an LLM from the University of Cumbria and an MBA from Queen Mary University of London. He also has several certifications in intellectual property, data protection, fintech, and cyber security. Before Davidson comes on, I just want to say once again a big thank you to the LLNG Legal Learning Academy and to all the firms that have supported us through this training session. Make them all Will and Emery, TMP, LX, Olani Wajayi. Thank you very much. Davidson, the floor is yours. Thank you.
Thank you, sir. And good evening to everyone. I'm always excited having the last session in any of these things because people are tired, and so they can basically say anything and get away with it. But I stand
Not
on
today.
Not today. But I stand on existing protocols. And thank you to Bena and the NBA-ICLE for having me. Thank you, Dami. Thank you, Babajimi, as well. You've really made my work a whole lot easier. And I'm hopeful that my session would bring value to people as well. I'm going to be taking us through just a few things around anti-money laundering and combating financing of terrorism, AML, CFT for short. So I'll be using that during this presentation just to make it easier and less tongue-biting. So risk and compliance for fintech companies. I mean, this is the overview, right? But one thing that some of us need to understand, and I'm sure speaking to lawyers makes it easier, when you consider what anti-money laundering is, then think of what money laundering is. And one simple way of just thinking about it is think of when you're laundering your clothes, right? At 1 minute, the clothes are dirty, then you launder it. It now becomes clean. And that's what people do with funds, funds that are gotten illegally. And I said I wasn't going to reference any of the conventions taking place, during this period, but because presumably whatever funding is being passed around are legal funding, but peradventure, some of it was illegal, then people would get those funds illegally, and then they would launder it by making it clean so that, that's where the laundering comes in. So it now becomes clean on the other end as though it was the proceeds of legitimate business, and the law frowns on that. And which is why some sort of businesses like those involved in cryptocurrency are usually on the receiving end when it comes to AML CFT, because it has turned out to be like a ready tool for people who are involved in that space because of the opacity that is around virtual assets and crypto. People use it as a means of, maybe they could hack into somebody's account, steal the money, use it and buy Bitcoin. At the end of the day, nobody really knows where it came from. I've had a few clients who have found themselves in those situations where they tried buying, crypto overseas, and then maybe through Bank of America, one of the US accounts, and those were flagged. It now made the authorities look closely at those bank accounts, and they realized that maybe some of the funding in there were not so legitimate, and they had to freeze, and see some of those funds. So definitely, the AML CFT is something that fintechs need to be aware of, and lawyers who guide them also need to be aware of how it could affect their businesses. So this is just an overview, description of AML CFT. What is the regulatory regime governing it in Nigeria, the different laws, and what are the triggers that are applicable to fintech companies? What are the responsibilities of an AML CFT compliance office in the fintech organization? So we'll find out what the compliance officer is, what that office entails, and how it will be important for lawyers, within the fintech ecosystem to be able to work around that. We'll look at some of the relevant AML CFT documents needed by fintech companies, risk assessment policy, the general policy that applies, and then also consider what is the role of a lawyer in ensuring AML CFT compliance. So let's delve into it. I mean, what exactly is AML CFT, right? Then I give an example of, just trying to simplify it, because some of the definitions really make it seem like, it's complex. But most of the frameworks that you would see for AML CFT guides towards protecting the integrity and stability of a country's financial system by limiting resources available to terrorists and increasing the difficulty to profit from criminal activity. So, so fintechs are now linked to the general financial systems that you would find in different countries. So, a couple of years ago, fintechs, as we know them, didn't exist. And if you've been following the course since yesterday, and part of what the speakers, spoke about today, and the evolution of fintech, we know that it has sort of changed from what it was initially to where it is now. And so when you now have fintechs involved in the financial systems, it's important that the integrity and stability of the financial systems are protected, because where you have situation where people consider fintechs as being conduit for, passing through illegal funding, then it affects the financial stability of the country. Where terrorists consider that, okay, well, we can actually launder funds through this way, then it poses a challenge. Now, one of the reasons why typically it appears as though, and this is in general financial space, it appears as though governments can track terrorist financing. It is because each country has its own central bank, and so they are aware of the amount that is in circulation. I mean, I can't speak for Nigeria, but generally, they're supposed to be aware of the amount of currency that is in circulation. So where there is, where there are those changes, and then where funding is being used for a particular purpose, it's actually easy to track where the money started from, who it got to, and where it ended up. What some Nigerians do now around terrorism financing or money laundering is quite amazing. There was a recent one that one of my clients almost got involved in, where somebody reached out and said, look, we want you to do a supply for us. It seemed like a legitimate US company. We want you to do a supply for us and all of that. They said, oh, wow, fantastic. They sent in their quote. They now said, okay, now what will happen is a third party is going to pay you on behalf of this contract, but that they will pay you the entire money. When you get that whole money, take out your own fees and then transfer the rest to us. For somebody who is, who is looking for money, that makes sense. I mean, who doesn't want to collect dollars like that? But when we looked at it, we're like, no, as in, why wouldn't he just want to pay you that? I mean, why should a third party pay you and then you're not removing your money? So you also need to be aware of how some of these things work and how they're trying to launder money through you. But by the time the authorities are tracking those things and they see your bank account, the story you start telling will be plenty, so it's best not to find yourself in that situation. Money laundering is defined according to the US Convention, as the conversion or transfer of property, knowing that such property is the proceeds of crime. So, of course, most times when you're dealing with money laundering, you're talking about currency, but currency is a form of property. So where you know that it is, the proceeds of crime, but you still convert it, right? Just like I described. Then the concealment of the skies of the true nature, source, location, disposition, movement, or ownership of or rights with respect to property, knowing that such property is the proceeds of crime. So, you're changing it, you're moving it from one place to the other. Whether somebody decided to get involved in terrorism financing or money laundering and then use it to buy cryptocurrency so that it now enters into that space. But where the opportunity comes for it to be tracked and it ends up in one of those places and you've concealed the identity, it will also be classified under AML CFT. Now, the acquisition, possession, or use of property, knowing at the time of receipt that such property is the proceeds of crime, would also be classified under the AML CFT procedure. So this is how the International Convention for the Suppression of the Financing of Terrorism describes it and describes financing of terrorism. That person, by any means, directly or indirectly, unlawfully and willfully provides or collects funds with the intention that it should be used, or in the knowledge that they are to be used in full or in part, in order to carry out an act which constitutes an offense within the scope of the convention or any other act intended to cause death or serious bodily injury to a civilian. So what the convention did was it described those sort of offenses, right, that are categorized under this. Now, where somebody decides to sponsor and he uses the word directly or indirectly, right? So you may not even know that you're sponsoring it, but when you collect funds or you provide funds and you have the intention that it should be used for that particular purpose of what constitutes a crime when it comes to financing of terrorism, then you will fall under this category. So for fintechs, for instance, who may just be trying to carry out their legitimate business, it's always important for them to carry out their KYCs, which we'll be looking at shortly. Now, of course, naturally, in Nigeria, there will be a lot of framework regulatory regime that govern AML CFT. For anybody who hasn't been living somewhere else, you would realize that there's been a rise in quite a number of quote unquote, maybe terrorist attacks, banditry, and sources of external funding have been fingered sometimes in some of these things. So definitely having a strong legal, regulatory, and institutional framework, which would assist in the detection, prevention, prohibition, prosecution, and punishment of money laundering and terrorism financing is definitely something that Nigeria needs. what are some of the laws that exist? We have the Money Laundering Prevention and Prohibition Act. We have the Terrorism Prevention and Prohibition Act. Those are the two major, laws that were recently passed and sort of amended / repealed some of the existing laws. But other than those ones, of course, you still have the EFCC Act, both here. You have ICPC Act, the Proceeds of Crime Recovery and Management Act as well. There are a couple of other laws that exist within the space, like the NBA-ICLE Act and a couple of other CBN, AML regulations that exist as well. In terms of the regulators, there are quite a number of them, and you would find them being involved depending on the level of exposure of that company. And while some of them may not be actively involved in execution and management, but where certain red flags are identified, their input will be required along the way. So definitely the CBN and the SEC, being agencies that deal directly with banks and fintechs who typically would find themselves requiring customers who pay or process transactions will play a strong role in that. You also have the SCUMO, which is sort of like a department under the DFCC as well. There's NICOM, to an extent CAC as well, because where they need to lift the veil to find out who the true persons that own those companies are involved in all of that, then they will definitely need to look into it. What is the institutional framework? Who are the bodies that would have to carry out functions around ensuring that there is sufficient implementation and execution of those laws? You have the DFCC, and in Abuja, they said some of them were visiting the convention grounds. I wondered when I saw it because they all wore their red jackets. I was like, if anybody was actually involved in anything, by the time they see the FCC red jacket, they'll probably take off. But of course, they have a role to play around the ML, CFT, the NFIU, very important, the Nigerian Police Force, SCUMO, are also relevant in enforcement. Of course, there's ICPC, there's the DSS. Basically, most of the enforcement agencies and even the FIRS as well have a role to play in implementation of AML, CFT. So what are some of these triggers, right, that apply to fintech companies? And Section 4 of the Money Laundering Prohibition Act actually helps us on some of that. It sort of classifies, institutions that would be financial institutions and designated non-financial institutions. And there's actually a small story there behind the DNFIs that once upon a time, law firms were actually classified under DNFIs. But the NBA took up the challenge of, fighting against that provision of the Money Laundering Act. And fortunately enough, that was actually part of the team that represented the NBA in court concerning that matter. And we were able to have that provision at Section 4 of the amended or the repealed law was actually struck down and had to be sort of edited or revised to exclude law firms. It went to the Court of Appeal, where I think the NBA was also successful. So it shows that the NBA is actually doing the good work behind ensuring that lawyers are protected when it comes to being put under the microscope for things that we ought not to do. And part of the argument we had was that you already had the NBA, you already had different bodies, the Legal Practitioners Act already. There were laws and institutions that already made sufficient provisions for due diligence to be done on lawyers and all of that. So why do we now need to subject ourselves, considering the fees that some of us collect and different things, then we will now be subjecting ourselves. Why should we even be regarded as DNFIs? And the court agreed with us and struck down that provision. But Section 4 of the Money Laundering Act imposes an obligation to DNFIs and to conduct know your customer checks on customers and due diligence to ensure that they are who they say they are, and they will not be carrying out activities that will be contrary to the provisions of the law. So, of course, banking financial institutions would fall under FIs, and to an extent, fintechs that are involved in payment and lending. So banks, body corporates, group of persons which carry out business with investment securities, virtual asset providers, blah, blah. Note that virtual asset providers were not in the formal, with the law that was repealed. But of course, with the advancement of time, we've seen classifications change, which is why cryptocurrency companies and people who are involved in crypto exchanges and sale or depositing of virtual assets would fall under this as well. And then the DNFIs now include dealers in automotives, jewelry, businesses involved in the hospitality industry, chartered accountants, audit firms, tax consultants, clearing and settlement companies are classified there. Thankfully, law firms are no longer there. Yeah, and I'm sure that for some of us who have our clients involved in some of these spaces, we've had to help them through most of the SCOMO regulations and meeting up and doing some of those registrations. I'm going to breeze through some of these KYC requirements, right, that apply to fintech. So identifying customers, verifying their data, also to identify the beneficial owners, right, using relevant information or data obtained from a reliable source. So it's not just enough for the intending customer to bring their documents to the fintech and say, this is who we are. You know, the know your customer, rule book, for want of a better way of putting it, still requires you to go the extra mile of trying to verify some of these things from reliable sources, right? So you need to be sure of, okay, who is sending the money and then who is going to be receiving the money as well. Customer due diligence also, requires the measures undertaken when establishing business relationships, carrying out occasional transactions above the applicable designated threshold prescribed by relevant regulations. Those situations where the CBN has placed some caps and says, if anybody is transacting above a particular level, then KYC is required. So even though, an extra layer of due diligence. So even though those guys may already be the customer of the fintech, if it goes above a particular level, then you're supposed to carry out an extra due diligence because there may be a few extra things going on. Now, there are also some transactions too that may create suspicion, like a red flag that could this be, involved in terrorist financing, which is what I sort of gave earlier, where when people are trying to get involved in cryptocurrency or some other sort of transactions, red flags immediately go up because you're like, okay. And that is simply because of the reputation that some of these transactions have acquired over time. They may be clean, and a lot of people are involved in those spaces that are carrying out very legitimate businesses. However, there just tends to be that concern around it that maybe, just maybe, there is something going on here that we need to be aware of. And so you then, that sort of triggers those obligations, where there are wire transfers, cross-border and domestic transfers between DeFis. Red flags are also raised as well. There are a couple of other regulations here. I'll try and keep it simple. But one thing that fintechs have an obligation to do, especially under the CBN, AML, CFT regulations for short, includes complying with CBN's extensive AML, CFT, and KYC requirements. So CBN already has all of this lined out, and you have an obligation to ensure that you've gone through all of that and can guide your clients effectively on the requirements that have to arise. Creating AML, CFT policies and making necessary periodic returns reports to regulatory agencies like CBN, EFCC, and DNFIU. So these have, there are certain reporting obligations you have each month. You're supposed to report to those agencies and let them know what has transpired. If there were any transactions that went above a particular threshold, right? You're also supposed to have your own internal AML, CFT policies, which can be derived from the existing CBN, requirements. But you create that, and when you're onboarding new customers, you share that with them so that they are aware of what currently exists within your obligations. Now, this is the next one is actually where lawyers play a role. The fintechs are required to appoint a chief compliance officer and comply with the extant KYC and other customer due diligence policies. I mean, if you have a fintech who is simply trying to run a successful business, right, it's going to be difficult for them to know all of this. And that's why practically most of the compliance, if not all compliance officers you would find within these banks, fintechs that operate within this space and deal with AML, CFT would be lawyers. And it's an opportunity for lawyers to be able to take advantage of this and work with fintechs, either as an external or internal advisors, and be able to also advise them around existing AML regulations and the offenses that arise if there are infractions that take place. Some of the highlights of the new Money Laundering Act. I mentioned earlier on that under the previous money laundering law, virtual assets were not considered, right? But I'm sure that for any of us who have been observing some of the trends over the last 3 to 4 years, there have been a lot of advancements in blockchain technology and what people are doing, the existence of virtual assets, people having initial coin offerings, initial exchange offerings, people basically dealing in crypto and even doing funding rounds. People are doing Series A, Series B now for crypto companies. Binance is growing. Patricia, there are a number of them that have become mainstream in themselves, and they are collecting money, they are processing, they know a lot of things. CBN is always concerned about them, is always looking forward to ban in that space. So now you have non-fungible tokens, NFTs for short, and even the metaverse where people are actively using cryptocurrency and NFTs to carry out activities. You can actually buy property now in the metaverse. And most of the time, the medium of exchange is virtual currency. You're not going to, either virtual currency or dollars for some of them, but you will see most of them letting you know from the onset that crypto and virtual currencies are accepted, and most times is Bitcoin. So taking all of this into consideration, that this is a 2022 law, the Money Laundering Act actually classifies them as financial institutions. And so as the SEC has released its new rules for virtual asset providers, it now sort of creates that awareness around them that they will now be supervised by the CBN when it comes to processing funding and under the AML CFT arrangement. You can always catch up the definition of virtual assets from the slides, but just think of it as, digital money. It has a store of value. You can transfer, you can use it to pay, but it doesn't include digital representation of fiat currencies, securities, and other financial assets. So think of your cryptocurrencies, right? But not like central bank digital currencies, which is what they, sort of explained that, it doesn't include digital representation of fiat currency. So fiat, for instance, is your Naira and Kobo. But virtual assets doesn't come within. If you look at it on the wider scale of what virtual assets or digital currencies is, you could use a wider word, digital currency, to cover all forms of, digital money, which will then include digital currencies, CBDCs, and also crypto. So fintech companies that provide virtual asset services now fall under FIs, and so they have to meet up with the KYC and customer due diligence requirement, which is important for lawyers who serve as compliance officers to be aware of, because it means that the game has changed following the introduction of the Money Laundering Act. It's no longer what it was before. So if you are advising or dealing with a client who is involved in cryptocurrency, you now need to let them become aware that there is now an additional layer that they need to be considered about when it comes to AML CFT. They now need to look at these existing CBN laws and understand that getting involved in that space means clearance from the CBN, those reporting obligations now come into play, SCUMU registration and all of that. And we just explained here that, an unregulated entity that doesn't fall under the definition of an FI or a DNFI is not bound by the requirements of the Act. So there could be a few, companies who may be carrying out some form of, trading. Forex traders, for instance, I know that and people who do contracts for differences, and some of these securities wouldn't fall under this, right? So because they're not designated as FI or DNFIs, but where you have a CBN or SEC license and you look at this closely, you would realize that it's in your best interest. Of course, the SEC also places their own AML, CFL obligations on fintechs who maybe are involved in crowdfunding, robo-advisory, asset management, fund managers, brokers. All of them have their AML, CFT requirements that they need to be aware of. Now, what are the responsibilities of an AML-CFT compliance officer, which would include lawyers? Developing a compliance program, receiving and vetting suspicious transaction reports from staff, filing suspicious transaction reports with the NFIU, filing other regulatory returns with the CBN and other relevant regulation supervisory authorities, rendering new reports to the CBN and the NFIU when necessary to ensure compliance, ensuring that the FI's compliance program is implemented, coordinating the training of staff in AML, CFT awareness, detection methods and reporting requirements, and serving both as a liaison officer between his institution, the CBN and NFIU, and a point of contact for all employees on issues relating to money laundering and terrorist financing. So you can see that the compliance officer is very invaluable to the organization, and that role cannot be played by just anyone who has a faint understanding of how laws or regulations work. Definitely is a role for a lawyer that can grasp most of these things. You have to carve out a policy. Your clients need to be aware of those policies. You have to have your KYC in place. You have to also ensure that you carry out trainings for the officials and employees of that company, because you see, it's not everybody who is working within a financial institution that is aware of how some of these things work. And the compliance officer is not going to be will not have the time to go to each person's desk and be vetting each transaction and ensuring that it's going well, which is why periodic trainings are important, because that heightened awareness around the fact that somebody's license could be in jeopardy if the right AML CFT policies are not in place. It's something that they need to be aware of. Now let's just break down some of these documents we've described. What's an AML CFT policy? This describes how the fintech will administer their AML program by detailing the steps it will take to combat money laundering and terrorist financing crimes. So basically sets out how you would go about, number one, protecting the organization, and then where there's any infraction that arises, what steps are you going to adopt in order to combat that infraction that has taken place. So again, both for the internal compliance officer as well as the external legal advisor, there is still a role for lawyers to play, because although the fintech may create their AML policy, it's advisable that they hire a professional with expertise who can review the AML policy and identify all potential pitfalls. And do note that even as a lawyer, there are also further trainings you can carry out within this AML CFT space that would make you invaluable to organizations. I know of someone who now carries out AML CFT trainings for cryptocurrency guys. That's his niche. He has just carved a niche for himself, and he trains them around investigations, around being able to put together the right type of policies for the different types of fintech. So there are opportunities there that would exist. But if you find yourself in that situation where a client reaches out to you to help them with an AML CFT policy, it's important that you pay a lot of attention and scope most of these laws that exist to be sure that what you have is comprehensive enough for them. Now, another document is the risk assessment report, right? So this provides a comprehensive analysis of the AML CFT risk in compliance in a concise and organized presentation, and helps in identifying the fintech's money laundering / financial terrorism profile, examination reports, work papers, independent reviews, auditors report, right? So in all of that, you still need to have, an assessment report periodically that will show what could have happened, what happened, and steps that can be taken to protect yourself. Now, what are the role of lawyers? And let's face lawyers now and look at what they can really do, right? Of course, I've mentioned a couple of them, but one thing that we need to understand for lawyers is that they play a gatekeeping role, under the Financial Action Task Force. Now, this Financial Action Task Force was set up as like a global body. And for some countries like Nigeria, for instance, we've been on the radar for a while. One of the reasons why the Money Laundering Act was enacted, why the SEC issued their rules on virtual assets, is because the FATF actually gave Nigeria a deadline to meet up with updating most of these laws and regulations, or else we would have found ourselves kicked out of, the financial, framework that countries have signed up to. So it was a very serious matter, right? Now, lawyers and other professionals and, are supposed to help, most of these fintechs and financial institutions take preventive measures that are actually imposed on, financial institutions. So there's a lot of work that, comes in play. And as gatekeepers, we're supposed to protect them so that they don't face those problems. It's much easier to serve as, somebody who prevents something from happening than trying to solve it when it happens, even though knowledge of both, is required. Now, what are some of the recommendations on the obligations of gatekeepers? The duty to implement internal control measures within the fintech. So, you conduct implementations, which I've already referenced, establish an independent audit function to test implementation measures, and then general creation of internal policies, right? So you need to be able to create those policies that would make you invaluable to that organization. Either you are serving as an external legal advisor or you're serving as a compliance officer, but just being able to have those strong, internal policies in place, being able to conduct those trainings and upscale, these people, and be able to make those reports to the regulators that these are the procedures that have been taken as gatekeepers to ensure that there's compliance. Now, there's recommendation 22, of course, due diligence, record keeping when engaged or prepared to carry out certain transactions. So where there's buying and selling of real estate, managing of client money, securities, assets, where the fintech is involved as a platform where these sort of transactions take place, there's an obligation on you by virtue of Regulation 22 as a gatekeeper to carry out due diligence, the right type of due diligence that will protect your organization and fintech from suffering loss that could arise. Also, these are some things that we already referenced: reporting suspicious transactions to the competent authority on reasonable grounds that the funds are linked or related to or to be used for terrorism financing or by terrorist organizations. And as a compliance officer or as an external legal advisor, you don't have to be concerned about how the customer will take some of your due diligence or KYC requests, because it is one thing to feel that somebody is offended, right? And then you don't know what you're supposed to do. But it's a completely different thing if you don't do that. And at the end of the day, your employer or the fintech now suffers loss or gets its license revoked because of its lack of carrying out the right type of procedures. Now, under recommendation 2 of the FATF Special 9 recommendations, countries are obliged to criminalize terrorist financing as one of the predicate offenses of money laundering. So very obvious in that. Now, what are the legal implications of the reporting obligations, right? We've already looked at what Section 4 of the Money Laundering Act has done. It also provides that legal professional privilege and invocation of client confidentiality shall not apply in connection with the following. So, of course, lawyers are supposed to, given the Evidence Act, and generally lawyers have customer-client privilege. So there are times when lawyers have been involved in conduit. Allegations are made, let me just put it that way. There have been allegations made from time to time that a lawyer's fees formed part of something, or somebody took money for the purpose of money laundering. And it's easy to think that lawyers will do that, right? Because sometimes when you see what some law firms, like the law firms that some of the speakers on this panel work with, you think, well, maybe they're actually involved in as serving as conduits and all of that. But when you drill through it, you realize that that's actually not the case. But there's a level of confidentiality that applies, right? Client confidentiality. But according to the Money Laundering Act, the invocation of client confidentiality shall not apply in connection with the following: purchase or sale of property. So where there's a purchase or sale of property that involves a lawyer, getting sort of involved in that transaction, then they can actually be required to make some reports on that. Purchase or sale of any business managing of client money, securities or other assets, opening or management of bank savings or securities accounts, creation, operation or management of trust, companies or similar structures, or anything produced in furtherance of any unlawful act. So where a lawyer finds himself as being an advisor in any of such transactions, the client's lawyer confidentiality privilege will not apply under those circumstances. And I think I've come to the end of my presentation, and thank you for your time. I made it in good time, so thank you.
Thank you very much, Davidson. Tobina is not here at the moment, but so we'll be moving.
I'm here. It's you. It's your turn.
Okay, I was going to proceed with the question and answer.
Yeah, go ahead. Go ahead. I'll finish when you're done.
Okay, all right. So we have some questions here, and just to remind the participants again to kindly drop your questions in the Q&A box so that we can attend to them. So this question is from Tochukwu, and it says, regardless of the risk involved in dealing with crypto as it relates to AML and CFT, is dealing with crypto totally illegal under the Nigerian law?
Okay, well, thanks. So the direct question to that is no. It's not illegal in itself, because what the central bank did was it said, look, organizations, that is banks, non-financial, banks and non-bank institutions, which includes fintechs and a couple of other guys in the ecosystem that deal with monies, payments, and all of that, but are regulated by the CBN, should no longer allow customers who deal in cryptocurrency, or even themselves, because there were a few of them that were becoming crypto-friendly organizations, right? Providus already had some kind of crypto arrangement. Some guys like PiggyVest were launching something that would allow savings through crypto. There was a lot going on because that opportunity was there. And so CBN now said, you have to unhook. Number one, you can't deal with that, so just pack that somewhere. But then if you had customers who were involved in that, maybe as exchanges or as dealers or anything, you have to take them off the banking system. So in other words, they can't bank with you anymore. So because cryptocurrency is not classified as currency in Nigeria, and CBN Act only gives them powers around, money, currency, legal tender. So since this is not legal tender, they cannot ban it. You can't ban something that you have no power over, right? So they didn't ban that. Now, what the SEC had done was, in 2020, they had released a statement saying that cryptocurrency is classified as securities, and so they would be regulated by the SEC. The CBN didn't like that anyway, so the CBN came out with that ban. What actually then happened was that people now started doing peer-to-peer trading, which grew the cryptocurrency market in Nigeria. We're like classified as the second most active and highest cryptocurrency market in the world. So it just meant that people were no longer even concerned about banks. Now they were now doing peer-to-peer, which raised the stakes for them. Now, what the SEC did about 3 weeks ago was they now came out with their own rules for virtual assets. And of course, like I had explained during my presentation, virtual assets falls under this, cryptocurrency and other tokens fall under virtual assets. So what they then did was it now classified people who were custodians, who were digital exchanges, and basically gave them a licensing categorization. You have to look at that and be able to register within that space and then get a license. Now, this is even quite interesting for me because, and I just finished doing an advice for a client earlier today on this, because what it then does is, if the CBN has said you can no longer allow, for want of a better way of looking, virtual asset providers to bank with you, But the SEC has now given a license to these people, to at least to people, even though the entry requirement is high because it's 30 million naira as a registration fee. But if that now allows you to register and get a license, what does that then do for you? Because does that then mean you can actually now approach the banks and bank with them? I guess that's something that may have to happen, because if you've been licensed by the SEC, that means that there's a level of visibility around what you do. There's AML, CFT, there are other things. And so there's a possibility that they would now be allowed to hold bank accounts and carry out banking operations. But yes, to answer your question again, it's not illegal in Nigeria.
Thank you. The next question is, the new Anti-Money Laundering Act of 2022 has reintroduced legal practitioners as DNFIs. Has this provision not statutorily overruled the Court of Appeal decision exempting lawyers? What is the implication for lawyers?
Yeah, well, so I touched on some of that, right? And the obligations that are now placed on lawyers. I would say that there's a slight difference here, and it probably depends on whether the NBA wants to challenge that as well. Even though I'm not sure that I'm not sure that I'll have time to go to court again on this matter. But that depends on whether the NBA would want to challenge, that again, and have it, because the parties to that suit included the CBN, they included the EFCC, right? Yeah, so both of them were aware of the decision in court and what it basically did for lawyers. So yes, the NBA can decide to challenge those provisions that touch on legal practitioners, and let's see what happens at the end of the day. An argument could be made that it was probably done per incuriam, so to speak. But I believe that at the end of the day, though, going back to court will probably be the right step to take. But that has to be prompted by the national body anyway. If we have zealous lawyers there, because we basically did that case pro bono, but if there are zealous lawyers who want to take it up, I think it's probably important that we look at that again and see how it works out.
Thank you. This is the final question. Someone's asking if school registration is a one-time obligation or if it is required to be done periodically.
So it's a one-off. I mean, when you register with school, then you get your certificate, right? So you have your school certificate. However, there may be need for periodic reporting. I mean, for instance, having registered with school, if there are transactions that take place within the threshold, then you're supposed to report to school and let them know that this is what has happened, But yes, you get your certificate, and then that sort of gives you coverage, and it's free to do your school. Even though there's a training that goes along with it, and sometimes it takes time. But for companies who fall within that school threshold, you actually can't open the bank account until you have your school certificate. So it's not a continuous thing, but there are reporting obligations that rest on you where you fall within the categorization of DNFI and FI.
Thank you. There's some other question here which I believe would be best taken offline. For instance, someone wants to know how to improve herself in compliance practice. So I recommend that she takes it offline and maybe reaches out to you if you don't mind.
Sorry, you can reach out. It's fine.
All right. And the next question on the finance, so there's a question here on whether a finance company licensed by CBN can operate as a fintech and mobile money agents. Just to tell the person that asked this question that this should be addressed in tomorrow's session. So yes, that is why I'm skipping the question. So thank you very much for the questions. Now I'll be handing over to Bina.
All right, thank you.
Thank you very much. Thank you, Kofo, for taking us through the questions. Brilliant. Davidson, what can I say? It's very exciting, very, very happy with the way you dealt with the entire session. Thank you very much for having stayed through from the beginning till now. Brilliant insights you brought in, quite a number of things to think about, but thank you very much. I mean, whenever people look at terrorism financing or money laundering and issues related to that, it's with a lot of interest, and it's no wonder governments and even individuals are worried about the role that fintech could play in this area. So thank you very much for the illuminating presentation. Thank you.
I'm loyal, sir.
And we look forward to seeing you tomorrow when you'll be dealing with data protection, which is quite an interesting area also. Thank you very much. And also, Kofo, we look forward to seeing you again tomorrow. Thank you, everyone, for participating today. The numbers have been good. We're happy with the interest we've seen through this training series. I just want to say a big thank you to you. I also want to say another thank you to NLNG Learning Academy, Legal Learning Academy, and to TMP, Olaniwaja LP, and to Alex for graciously lending their partners to us for today's and yesterday's sessions. So thank you very much. I look forward to seeing you all tomorrow. I hope you enjoy the session. Good luck, God bless, and goodbye.